When it comes to one question that I have pop up a lot is when it comes to your actual death. So you're, 70 years from now, it's time to go. What happens if you have not been using the cash value of these policies and you die? So now, depending on what year you're in, you have a $500,000 death benefit, but you have $50,000 in cash value sitting in the policy. Tell me how that works out at the end.
Sure. Can I just show it? Might be
Sure.
easier if I just show you a policy illustration here. The death benefit is going to climb because you're putting money, and I didn't really get into the specially designed part of it, but you're putting money into a paid up addition rider, which is forcing the death benefit to go up. So like here, this is just an example of somebody putting 5934 into a policy. And then over here, I want you to look at this is the PUA death benefit. So this is showing how much the death benefit is increasing each year. But just look at the death benefit, total net death benefit. Okay, we go from 73,000 to 85 to 97 to 109 to 121, 132, 143, while your cash value is also climbing. So you can see your cash value is climbing from 32, 39, 46. At the same time, you are increasing through paid up additions and the dividends going into paid up additions specifically. You're putting more premium in, which is increasing the death benefit. So you can see this. I mean, this started off as a very small policy, very small, but the death benefit just keeps getting bigger and bigger as time goes by. So I just figured it'd be easier just to show it than to say it.
So I'm not going to use the names for YouTubers that come out and they will literally say that your death benefit does not include any of your cash value. And so your
Well, they're
family
correct in
doesn't
saying that.
benefit.
They are correct in saying that your cash value is not directly impacting your death benefit, but what that one person starts with a D, yeah, and we could figure the rest out, and ends in an R. That person is right in what he's saying, but he's missing the fact that we are specially designing these policies. The paid up additions and the dividends going to the paid up additions has to increase the death benefit. So Dave should call the insurance company and be like, so how should I explain this? Because I'm telling people the death benefit never goes up. You don't get any of that cash value. The cash value increases the dividend, which increases the death benefit. Therefore, your death benefit is indeed going up because your cash value is guaranteed to go up.
Okay,
It's
that's what I
crazy.
thought. That's what I thought, but I get that a lot because they're like, well, I've never wanted to do that because I'm going to lose. My family won't get what I'm actually depositing, but that's not true. Okay,
Not the
so
case at all. No,
thank you
that
for showing that.
person, a lot of people that are watching that person should really understand a lot of his motive, but we won't go there today.
Yeah, I know. All right. Well, I appreciate you so much for coming on again today and running through this with us. Every time that we have these meetings, I learn something that I did not know before. So I'm grateful myself, but I believe that when the American people start catching on to what's happening, with their money just sitting in somebody else's bank first off, and then they realize, wait a minute, I have the power to do that, because we don't realize how much power we have with the way those are set up. So I appreciate you so much. People, if you're watching this, please take the time to rewatch these videos, because it comes every time you are watching the video. Your mindset is changing, and it takes that. It took me a long time to come into the realization of what's happening here and that it is realistic, because I'm doing it now, and I wouldn't be showing it to you if I wasn't in the process myself of watching this unfold in my own life. And it has been quite an experience. And when Chris is talking about that you're going to be paying yourself for your car, if you guys could just hear yourself say that yes, you're taking your money, paying for a car, and then you're paying yourself back. That's what I kept having go through my head while he was talking, is that you're really buying the car for yourself, from yourself, paying yourself back for your car, and nobody's in between that. that baby percentage rate that you're paying, it doesn't even qualify as an interest rate when you see how you're gaining the compound interest in this account while you're paying down your balance every month. And if you did the math on that, and I don't know that you could do the math on that to exactly know how much interest you pay over the 60-month or 54-month period that you showed there, but the math doesn't math when it comes to the interest, because it's coming down every month that you're putting a payment in. Your compound interest is growing in the dividends. So when you really were to do the math, you're probably not talking about hardly any interest that you're paying for that car. So it just is, I'm just so thankful that the Lord has showed us this wisdom of how the rich people actually use their own money. And I just feel like that it's just a beautiful light at the end of the tunnel that people did not even know were there or was there. So I appreciate you again. Thank you so much. I can't wait to meet with you again and see what you have up your sleeve going to teach us, because you're very good at what you do. And I appreciate you taking the time.
My pleasure. Thank you.
All right, guys, you all have a great rest of your day. Like I said, keep rewatching these videos. You're going to be amazed when the insight really just sticks you and you're like, oh my gosh, that's unbelievable, because it truly is. So I hope that you guys enjoy the videos. I hope you're getting value, and I look forward to seeing you in the next video.